Welcome, Steve Forbes. How are you, sir?
Good to be with you. Thank you.
So I'm really interested in hearing your take on what we are headed for with inflation. So let's start here.
Ahead.
Explain what inflation is, because some people, you're so used to hearing we're going to have 2% inflation. Oh, that's good. No, it's not. Is it, Steve?
No.
Yeah.
Just as you don't say we're going to reduce the size of a gallon of gasoline 2%, and that's good for you. No, it isn't. Keep it the same. So inflation, this is why we did this reader-friendly book, no jargon, straightforward. There are really two kinds of inflation. One, the non-money kind, non-monetary kind, is when, say, you have bad weather, so commodity prices go up, wheat prices go up, or you get the kind of shutdowns we had with the pandemic, which disrupts supply chains all over the world. We're still suffering from that. That sends prices up. And then you have the money kind, where the government reduces the value, in this case, of the dollar by creating too many of them. And we know the government has been spending on a spree. How has that been financed? A large part of it is the Federal Reserve buys those bonds. How does it get the money to buy those bonds? It creates it out of thin air, the ultimate ATM. Now, unfortunately, Glenn, on the non-monetary inflation, normally if you just leave the economy alone, those things will heal themselves. We did it after World War II, and we converted from a wartime economy to a peacetime economy. Disruptions, but we did it. But unfortunately, the Biden administration is putting obstacles in the way, starting with the war on fossil fuels and a lot of other crazy things they've done. 77 executive orders, $200 billion of new regulations. So they're making the problem worse instead of letting the economy heal. And the Federal Reserve, they've been printing a lot of money. They've been using gimmicks to try to keep that money from flooding the economy, but that's going to run out. So if they don't get their act together, we're in for a rough time. And let me just conclude on this. Unfortunately, and this is where we have a real danger now, the Fed believes the way you cure inflation is not by stopping the printing press and making the dollar whole again, making it stable again. They believe you do it by slowing the economy down, throwing people out of work. And that's what they're up to now.
So, Steve, first of all, the idea of inflation, where you say it's now at 8.5, that's just because we measure it differently. If you look at shadow stats that measure it the way we did under Reagan, it's at 17.1. Is that fair to do or not?
Well, this gets to the whole thing of how do you measure prices? The whole Labor Department has a whole bureau devoted to it. What do you put in the index? And one of the crazy things is when people's buying patterns change, let's say meat prices go up, which they have. So instead of having a steak, you might go for some cheap hamburger. Well, they don't count that as a inflation. They just say the patterns have changed. So yes, you can manipulate these things 6 ways to Sunday, but the bottom line is prices are going up. The cost of living is going up. Part of it is the pandemic and the Biden administration making things worse. We can cure that, hopefully with a new Congress. But the Federal Reserve, they got to get over this notion that when we do work, when we are trying to be prosperous, they got to slow us down. It's really bad stuff.
I don't know that anybody really understands the Fed balance sheet and what they've done and the money that they have loaned out, trillions of dollars that they have bailed banks out all around the world. If you can't, they're trying to sell off the stuff they have on their balance sheet, but every time they try that and raise interest rates, the economy stops. And so not sure they're going to be able to do either of those. How do you pull this money back in to be destroyed?
Well, what you do, first of all, which they won't do this part, is you leave interest rates alone. Let the market set interest rates. Controlling interest rates is like rent control, which, as we know, hurts new construction. This is trying to control the price of money, in effect, the price you pay for renting the money, so to speak. So they should just leave that alone and let the market do it. The market can sort it out very quickly. On your point about the balance sheet, when you say balance sheet, people's eyes start to glaze. Just think of it, Fed is sitting on a pile of bonds, and too many of them. And so what they should be doing is letting those bonds mature, not buying new bonds. Let the money supply go down. And if they do that in a responsible way, we'll avoid a huge slowdown. But let me give you something. This a gimmick that they've been employing in the past year when they were creating $120 billion a month, pulling money out of thin air. Let me just let's walk your listeners through on this. The Federal Reserve creates money. They call up a dealer, a bond dealer like Goldman Sachs, and say, we want to buy $1 billion of bonds. So Goldman says, fine. They give the Fed the bonds. And how does the Fed pay for those bonds? They credit Goldman's bank account. Where does that money come from? No place. The Fed just says, voila, you have it. And that's how they create the money out of thin air. So they're doing that last year at a rate of $120 billion a month to help finance the government's debt. And so what they did to try to keep from an even worse inflation than we've been experiencing is they then create the money and then borrow it back from the banks and money market funds overnight. If you want to get technical, if people want to look at this stuff, they go to the Fed balance sheet, they'll find a thing called reverse repurchase agreements. In effect, the Fed is pouring a bucket of water in one end of a pool and then taking it out at the other end of the pool. Now, that gimmick can't go on forever. And, a little over a year ago, they had 0 of these reverse repos. Now they have $1.7 trillion. That's the game they've been playing. Huge dam of money ready to flood the economy.
So we are now also, by turning taking the money and saying, oh, no, your central bank, that your dollars are no good to Russia. A lot of countries around the world are going, geez, if I get on the wrong side of America, all of a sudden what I have as gold is no good. That's not safe for me. We are destroying the dollar at the same time we're inflating the dollar. How's this going to end, Steve?
Well, ultimately, and this will sound very strange, and you shouldn't say it in polite company, ultimately, in a few years, we're going to do again what we did for the first 180 years of this country's existence, and that is tie the dollar to gold. What it means is gold, for a variety of reasons, keeps its intrinsic value. And all it means, it's like a measuring rod. Not perfect, but it keeps the dollar stable in value. If we had maintained the growth rates we did for that 180 years, which was the greatest in human history, and then we went off the gold standard in the early 70s, and since then, the average growth rate of the United States economy has gone down by at least 1/3, from about 4.25% to 2.75%. That doesn't sound like much, but you do that over 50 years. Let me just give you a number. The median household income today is about $68,000. If we'd maintained our historic rates of growth, which we did for 180 years through depressions, wars, civil war, you name it, if we'd maintained that average rate of growth, you know what the median income would be? $110,000. That's what we've lost for a half century of funny money. It's bad stuff.
Can you explain? You just said that the Fed is going to destroy jobs, or they're,
yes.
How are they doing?
They have this thing. They have this theory called the Phillips curve. It's not a baseball pitch. It's named after an economist who said that if you want low unemployment, you have to have higher inflation. If you want lower inflation, you have to have higher unemployment. They believe prosperity causes inflation. They don't realize devaluing the dollar causes inflation, but they can't grasp that. So as a result, when you hear this talk about soft landing, what they mean is, can we slow the economy down enough without going into a full-fledged recession? Usually their attempts at soft landings is a crash landing. Mm-hmm. They are trying to slow the economy down, create unemployment, because they think the economy is too prosperous. That's why they think we have this inflation. So they won't say that explicitly, but you press them on it. Yes, they want a slowdown, and they just hope they can avoid a recession. It's bogus thinking. Experience disproves it. But at the Fed, the Phillips curve is holy writ.
Steve, when you look at, by the way, we're talking to Steve Forbes. He's got a new book out called Inflation, What It Is, Why It's Bad, and How to Fix It. Steve, when you look at the money printing that we have done, you immediately think of Weimar Republic. I mean, idiots know that, hey, you can't keep doing this for very long and at huge sums of money, okay? Everybody learned that. Weimar Republic, Zimbabwe, et cetera, et cetera.
Venezuela today.
Yeah, Venezuela. So do we know or have a guess on how close we are to that? I mean, is there a possibility we go into hyperinflation?
You can't rule anything out with these people, but I think the answer is no. I think even some people at the Fed are realizing they're in the danger zone, and so they're trying to figure out. They got themselves into this mess, and they were doing this, by the way, undermining the value of the dollar before the COVID crisis. This was starting in 2018, so they can't say, "Oh, we did it because of COVID." No, they're doing it before COVID. So I think they're trying to figure out now how do we get ourselves out of this without getting a disaster. So I think they're going to slow down the money creation. But what they should be doing now is instead of trying to manipulate interest rates, just let their balance, just let the bonds mature and the size that they hold of those bonds go down. Nature will take care of it. Keep the dollar stable, and then let the bonds mature, run off, and we'll get through this. But the other side of the coin is even if the Fed starts to behave itself, then you have a government that is doing everything it can to slow the productive part of the economy. You know,
right.
The genius of Ronald Reagan was when he cured the inflation, at the same time he had cut taxes, deregulation, and that's why we roared in the 80s.
Yeah.
After those tax cuts went into effect.
We're doing the exact
so we're gonna have
opposite.
To wait to 2024 to get that done. But in 2022, hopefully with the November elections, at least we can put barriers in the way of the Biden administration from putting new burdens on the economy. And also start questioning the Fed. What in the world are you guys doing? Why do you think prosperity is bad for us?
Steve, could I hold you for 1 minute?
Sure.
I've got about 5 more minutes if you have time. Hang on 60 seconds and we're back with Steve Forbes. Steve, I know this is off the inflation path a bit. We're talking to Steve Forbes, the book Inflation, What It Is, Why It's Bad, and How to Fix It. But I'm really concerned about these ESG programs, going and switching our economy to a stakeholder capitalism, which is just bullcrap, in my opinion. And the way we are letting BlackRock and others come in and just buy us all up. They're buying one in every 7 homes for sale going to BlackRock.
Well, and the good thing about a free economy, free country, and free speech is when these things start to happen, you can arouse the public. They won't say it publicly, but Coca-Cola and Delta really reversed course after they did what they did last year when they booted the All-Star game out of Atlanta because they didn't understand what Georgia did with the voting laws, which are more liberal than they were in New York City. Hello? And they got burned on that. They got real pushback on that. Disney's getting pushback on it. So the way you answer this stuff is you push back. And one of the things I think you're going to see happen after the November elections is looking at ideas on how, if you're a shareholder in a fund or a group, an ETF or something, how can you have a voice on how your share of the shares, so to speak, are voted at these annual meetings? It's complicated, but I think you're going to see real thinking on that. So it's not just a group of people. You know, decades ago, there was a great business guru called Peter Drucker, and some schools still read his books, business schools. but he warned of what he called pension fund socialism. He noted the rise of pension funds owned by the state and by endowment funds. And he said they could end up buying the economy. Government doesn't have to do it. They're doing it for them. So I think you're seeing real pushback on that. But this gets to what you might call modern socialism. The modern socialists recognize you don't have to take over a company or an industry. You just have to regulate it so its survival depends on your whims. And that's what the Biden administration is doing, practicing modern socialism and pressuring the BlackRock and others, or having BlackRock and others go along with pushing that kind of agenda. That has to be resisted. But modern socialism, different from what Marx had in mind, you get the regulators to do it. You don't have to take them over.
Would you say that we are now doing modern monetary theory in Washington? We have 1 minute.
They're doing a form of it. Modern monetary theory is simply modern garb on the old idea of devaluing money by creating too much of it. You know, in Roman times, they did it by reducing the precious metals in a coin and putting tin and junk in it. Modern times, we do it by printing up a lot of paper money, or now ellipsis on your handhelds. And it's the same thing. And what you see unfolding now, and we discussed this in the book, Inflation, is the old response of government. They scapegoat. You know, in Roman times, they blamed Christians. Medieval times, witches. Now today, we blame company executives with the same old movie.
Okay. Steve Forbes, thank you. Hold on just for a second. Steve Forbes, his new book is out today. You want to pick it up. Inflation, what it is, why it's bad, and how to fix it.